The market drops on the Fed catalyst. Did you heed the warning? This is Invest with Jacob. Okay guys, so in yesterday's video I issued a warning that now is not the time to be aggressively long, as we had bearish divergences on big time frames and the upside reward was being outweighed by the downside risk. Yesterday, the Fed made their announcement and the market shot down through 2 levels of support, and now the bulls face a major test. I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, January wrapped up yesterday. We had a great month. As you can see on the screen, our users are doing well. We were short before the Fed yesterday and did well on that. If you want to be part of this winning team, check out later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 4-hour futures chart for the S&P 500. And as I talked about yesterday, the theme for the Fed was support, support, support. If they could hold support, we could push higher. If not, then we were looking at a much bigger pattern to the downside, potentially playing out. They broke through the first 2 levels of support, and now the bulls are kind of up against it at that 48.50 area. They're over it right now at about 48.70. They need to hold 48.50 to continue the uptrend in a more direct manner. If they can't hold 48.50, then we're looking at a little bit of a bigger pattern. So let's start with the first bullish pattern. Okay, in this case, we would have 1, 2, 3. This pullback to 48.50 would be 4. That is the 764, which is the top of the beginning of the pivot. We move the pivot up based on the hitting the 1382. However, hitting the 764 is valid. And then we would look for this 5,000 plus level if they can hold 48.50 and push up from there. So right now, the bulls still in control until 48.50 breaks. And as long as we hold 48.50, I would expect to see 5,000 plus next after that. If, however, they cannot hold 48.50, that starts to tell us that we may have a bigger pattern playing out, and we may see a local top, if not a bigger top here at the 49.60 area. So that pattern would be an ABC back toward 5,000. And if you remember when we came down into these lows, I said that if the bulls were going to take control of this market again, they needed to push up in an ABC pattern, and they would have to push to all-time highs. Well, we didn't really get a great ABC here. The best we have is this is an A and a B and a C. And this really isn't the best B wave in the world. It's why this charting from here up was kind of an anomaly. This has never happened in the market history. We've never seen a move this straight up without at least a 236 retrace in the history of the market. And so it did make it a little challenging to figure out exactly where we were. But once we got a reasonable pullback up here, we kind of got ourselves under control. So now what we'd be looking at is if they fail here, we'd be looking at this to be an A wave, and then we'd be looking at a 3-wave move down in B, and then back up in C toward the 5,000 plus area. So this move down would target the 45.40 area on the ES down to as low as 43.22. I don't think we'll get quite that low. Although with the height of the A wave, it wouldn't shock me, but 44.44 would be the natural target here, and 45.43. So our zone here, 45.43 to 44, would be what we'd look for over the next few weeks to months if they cannot hold 48.50. That doesn't move. It's going to mean it's going to move in a straight line down, a straight line up, and a straight line down. The market does move in waves, and each one of these waves has subwaves. So when you guys see these things on here and it does this, and you go, ha, you were wrong, that's just not how the market moves. You get a bounce, then you get another move down, then you get a bounce, and so on. So overall, over the next few weeks to months, we would be looking at this 46.41 down to 44.44, with 45.43 to 44.44 being our target area for that B wave. There's good support here at the 45.43 area, so I could see them holding right in here. There's support all the way across. So that would be what we would look for, is for them to hold and push up from there to get that last high up to complete that super cycle 3 that I've talked about in my big picture videos. If they can't hold 44.44, then the bulls, they'll still have a little bit of room down here to 43.22, but the bulls will be up against it at that point, and we may be talking about a bigger top, but that's putting the cart before the horse. The first thing that has to happen is 48.50 has to break. Then we should look for continuation to the downside in an A, B, C, into that area. Over on the NASDAQ, Now on the NASDAQ, things are a little bit different. We talked about that 17,401 level. They did break that. They are down to the 764 on the NASDAQ as well. The 17,250 level is really where they need to hold, and so far they've done that. It's lower than you would want to see here, which is why I said 17,401 was more ideal. It does strike me as a stronger potential to break down. I did warn that the NASDAQ was showing signs of at least putting in a local top. And so if they can break that 17,250 level, that would be an issue for the bulls. But the biggest difference between the NASDAQ and the ES is once we topped in this wave 3 and you got wave 4 pullback, this wave 4, if you remember, I said was never really following the bearish pattern that we needed it to follow. I said the NASDAQ was a problem for the bears on this pullback because it was not impulsive. It was very overlapping, and they held the pivot. So it was very corrective, held, and then pushed up out as it should. And so we were looking for more of an impulsive move on the NASDAQ, which we've gotten, okay, where we topped in 3 here, pulled back in 4 at the start of January. And then we'd be completing this wave 5 up, where we just completed wave 3, and wave 4, as I said, came back down about as far as you can allow it. The 50% retrace of wave 3 is about as far as you can see a wave 4 go and still have a high probability of completing. So if they can hold this level at that 17,250, it's still deeper than I'd like. It still has a lower probability than the standard pullback would, but it's still a valid area. Then we would look for that last push up toward the 18.2 to 18.5 area to complete this 5th wave overall on the NASDAQ. So 17,250, big level to hold there at 17,260 now. So sitting right on top of it here in the after hours. They really need to hold that level and find an impulsive move higher if the bulls are going to stay in control. Now, if they can't hold the 17,250 area, it really comes down to support. So the NASDAQ has a few options to the upside, or a couple of options, a few options overall. None of them are great, though, and none of them I really like. So breaking support would be a very big warning to the bulls. The first would be that this was all of wave 3 instead of wave 3 topping here. So this would be all wave 3 of 3, wave 4 of 3, and then all of wave 3 up. Then you'd look for a bigger wave 4 to test this low right here, and a wave 5 up. That is one possibility we could see. The other would be if they want to try to end this wave 5 in an ending diagonal, they come down into wave 1 territory and then back up in wave 5. I really don't like that one at all. And then finally, if they can't hold this support level, then the NASDAQ could be looking at not only the top being in, but a much larger correction than we've seen previously. So this 16,350 area right here is a huge area for the NASDAQ to hold. Overall, if they can get down to that level, that would be a very key level to watch. And then how they react off of that level as well. So when they get down here, if they give us a corrective move up, then we could look something like that. So NASDAQ is really contingent on that 16,350 area in a big picture view, but in the more immediate view, that 17,250 area looks to hold to keep the more immediate bullish pattern intact. Guys, if you like the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial. Because I want you to get in there. I want you to make sure you love it. Make sure you like PT and I. Make sure you like the trading group. Just make sure it's for you. Before you ever spend a penny, you can cancel at any time. You literally have nothing to lose by checking out the rooms. We also have our advanced Elliott Wave course that's just about done. As you can see on the screen, people are loving it. It is going through the more complex patterns that you'll see in the market. And then we have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally make sense of a market that's irrational. It can be hard to understand why good news makes the market go down, like Microsoft yesterday, or how bad news makes the market go up. It doesn't make sense, and Elliott knew this, and this is why he knew that key levels mattered. By knowing key levels, you have a huge advantage over the rest of the field, and you know what happens when they hold and when they break. The course itself is 25 videos where I go through 3 different parts. The introduction, where we go over your mindset, the KISS method, and why it works. The chart setup and tools, where we go through every tool you need to use with Elliott Wave and how and why to use it, as well as the Elliott Wave for Beginners area, where we go through each of the waves, how they work, how to measure them, what happens when they succeed and fail, all the different things you need to know about Elliott Wave to make sense of this irrational market. The cool thing is, if you don't want to pay this $67, I completely get it. You can get the course for free simply by joining one of our rooms. In the first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the charts and what to expect, as well as any training material we put out. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, PT's income trading that's killing it, as well as his advanced reduced risk binary method that just crushes the market. He gets you in at a really cheap price and gets you huge multiples on your money, and it's how he structures that trade that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in the room so we can all make money together. All right, key takeaways for today. It's all about support. Can the bulls hold 48.50? If they can, they can take it immediately higher toward the 5,000 area to complete this circle wave 5. If not, we can be looking at a bigger B wave down into the 50% to 61.8% retrace in the 45.43 to 44.44 area. Over on the NASDAQ, they need to hold 17,250. If they can hold that level and push higher, we can go directly toward the 18,250, 18,500 area next. However, if they break down, it will depend on if they can hold the next support level and ultimately that 16,350 level. Stay above that and they can push back higher. Below that, and the NASDAQ may have topped and we could see a bigger correction. Guys, that is your market update for today. I will talk to you tomorrow.